Welcome to Finance News, your one-stop shop for all of this week's news in finance, business, and the stock markets. It's basically got all of the analysis quality of Newsbeat, but with zero budget. Anyway, let's get straight into the headlines around the world. In one of the biggest stories this week, the world of celebrity and cryptocurrency combine as global stars are pulled into a lawsuit about a pump and dump scheme. Kim Kardashian, Flloyd Mayweather Jr. and Paul Pierce have been named as defendants in the case against them and the creators of the Ethereum Max crypto token, which has no association whatsoever with the Ethereum project. All of the stars are alleged to have been paid significant sums of money to promote the token, which then saw its value soar in price over 1,300% at its peak, to then have slowly faded out over time as the creators sold off large chunks of their holdings along the way, which they currently deny. Kardashian and Mayweather both promoted the project to their hundreds of millions of followers on social media during the period of price inflation, allegedly saying how the token was making them money, a great investment opportunity, and a chance to get in early after many tokens were burnt. Ethereum Max's current price chart looks like a Robinhood trader's account from Wallstreetbets after he's gone all in on GameStop. Doesn't look good. Speaking of options trading, Reuters reported on Wednesday that risky practice of trading options has seen a huge rise in popularity. The news service confirmed that trading volumes in 2021 soared to record highs after more and more retail traders looked to get more exposure to the markets and place riskier bets, fueled by the meme stock craze and the rise of Wallstreetbets. The number of traders grew to its highest level and the amount of smaller options placed too grew significantly. Volumes soared to a record 9.87 billion contracts last year, a 32% increase over 2020, which is itself a record-setting year for volumes, Options Clearing Corp data showed. Speaking of record-breaking numbers, US inflation data was released this week, showing a whopping 7% rise in prices compared to the previous 12 months, the highest level since 1982. Leading the price rises in the Consumer Price Index data was increases in rent and accommodation prices, used car costs, and also energy, mainly in the form of oil, which is still being pushed to higher levels as global supply chains struggle to keep up with demand.
I wasn't playing games. Rent is too damn high.
Markets barely reacted to the data, which was seemingly already priced in alongside Wall Street expectations of around the 7% mark. The last time inflation hit these levels, interest rates were also soaring high too, hitting highs in the late teens during the same period. What a time to be alive. Barron's took a deep dive this week into the used car market, looking at current prices of old rust buckets. Prices have soared over the past year, with the same vehicle now costing 37% more than it did just 12 months ago. Price rises are due to the global chip shortage destined for the new car market, meaning that new vehicles are unable to be sold until they're fitted with the high-tech parts, pushing the price of their second-hand cousins way up. Top tip: not the best time to be looking to get a new car just yet. Stick with the old faithful for just a few more miles at least. According to CNBC, more money was invested by venture capitalists this year than ever before. The influx of easy money caused the number of unicorns to grow. That's the number of companies reaching a valuation of more than $1 billion to over 130 just in the San Francisco Bay Area alone. Venture capitalists pumped $328 billion into US startups and $61.8 billion into Chinese startups in 2021, while they only invested $39 billion into the UK. Sorry guys, we're just not that interesting. Worldwide, the figure stands at $675 billion, which was doubling from the year before. It's almost as if loose monetary policy, money printing, and low interest rates have some effect on the economy. I just can't figure it out. Leave your thoughts in the comment section below. Some well-recognized brands that have benefited included fintech app Revolut, who raised an $800 million Series E round, while rival Monzo raised over $600 million across 2 deals. Elsewhere, online events platform Hopin raised $850 million across 2 deals in 2021. In total, startups in the UK capital received $25 billion from VCs last year, up from $11 billion in 2020. And there are now 75 unicorns in London, with recent additions including mobile banking app Starling and insurtech startup Marshmallow. Prediction: before they go public, they'll get acquired by a US company and won't make it onto the London Stock Exchange. Watch this space. Now that we're here in the UK, let's talk headlines closest to home. Retail giants Tesco and M&S have moved up their profit forecasts after stronger than expected sales numbers in the final quarter of the year. The supermarket giant is suggesting that its results could come in now at £2.6 billion in profit compared to the earlier expectations of £2.5 billion, and this was due to a stronger than expected sales growth across both their retail and online delivery businesses, as well as strong sales from their wholesale company Booker. Marks & Spencer's experienced a similar final quarter boost and also raised their expectations slightly as both food sales and clothing, yes, people still buy their clothing, kept their tills ringing over the festive period. UK house builder Persimmon also showed a slight bump in revenue, reporting that $3.61 billion was brought in for 2021, which is 1% short of pre-pandemic levels. However, boss Dean Finch did highlight that the firm faces significant challenges with staff shortages and absences with a new variant of CV. Shares are down 5% over the last week and currently priced at £26.05. More from UK markets, ASOS, the online fashion retailer, has said that it would be raising the price of its clothing in response to the rising supply chain costs and global shipping. Shares in ASOS rose 255p or 11.3% to £25.14 after it reported 5% sales growth for the 4 months to the end of December. For the full year, ASOS reiterated its outlook of revenue growth of 10% to 15% and adjusted pre-tax profit of £110 million to £140 million. The company is also looking to move its listing from the smaller alternative investing market to the larger and prestigious FTSE 250 marketplace, which would allow more institutional investors access to the fast fashion retailer. Finally, to end our headlines, how about this story reported by The Times? The earliest known human skeleton with modern facial features is 30,000 years older than previously thought. The Omo 1 fossil, discovered by paleoanthropologist Richard Leakey in Ethiopia in the 1960s, was already regarded to be one of the earliest to share the anatomy seen in our species today. By analysing ash that was spread by an ancient volcanic eruption, a team of researchers has been able to say that this specimen is at least 230,000 years old. It was previously thought to date from a mere 197,000 years ago. With an extra 30,000 years, he could have easily made a lot more money if he would have just put £1 into the S&P 500. £1 over 999 years gets you £446 on its own, but I doubt that was on his mind back then. Next up, let's see who's gone public this week. Ooh, IPOs of the week. I wouldn't be doing that in public. Firstly, Justwork, a supplier of HR, payroll and benefit software, was due to IPO this week but has pulled out at the last moment. The New York-based firm was looking to raise $260 million on the public markets this week, but due to unfavourable conditions, the company has delayed this. Basically, they saw tech stocks tank and thought, we better wait a while. This doesn't look good, guys. One company that did, however, make it public was private equity firm TPG, who raised a mega $1 billion after its flotation took them to $9 billion. Fort Worth, Texas-based firm has nearly $109 billion in assets under management, with investments in companies including Airbnb, Spotify, Burger King, and McAfee. TPG said in a regulatory filing it intends to use the proceeds from the offering to fund growth initiatives and expenses. About 40% of the capital raised would go to TPG shareholders who are looking to cash out. A very nice payday for those guys. Now, get yourself to M&S and pick up a nice pack of multi-pack socks alongside some nice nibbles for the office. For every success story, there's always a fail. Let's see what's happened this week, as it's never all just rosy news. Just when you think it couldn't get any worse, fails of the week. This week saw the chief operating officer of Rivian depart the recently IPO'd company. The electric car maker, who hardly makes any cars yet, has a valuation of $70 billion, which is in line with the price that it went public back in November, after a huge run-up in demand generated by hype in the EV space. The ex-COO Rod Coate resigned from the company after a stint which lasted since March 2020. The company, whose flagship model is the flatbed truck, the R1T, starting at nearly $68,000, is looking to ramp up production with plans to open a new US-based factory. While still not making many vehicles, the company has filed trademarks for electric bicycles and motorbikes, presumably to generate some cash and sell something to customers who will be probably waiting a very long time for their pre-ordered trucks. At least they can go up and down their driveways on an electric bike for the next 2 years. Not too sure how they do the school run though. Anyway, leaving electric bikes alone, it's time now for your favourite section, all of the best memes on Reddit's most wholesome thread. Welcome to the best of the bets. True story, this first one. In order to get into the role, Mr. Phoenix really had to put his mind in a really depressed state. Simple solution for traders, just follow Kramer. Oh, how far we've come in just a few short years with commission-free trading, meme stocks and useless crypto tokens, that this meme really hits me in the feels. I promise you that if you turn the camera around, my room looks nothing like this. Honest. One story we should have covered more this week is all of the insider trading that goes on, still legally, in the US government. When Buffett can't time the market, but Pelosi can, you know something might be a little off. That's cute. Top trading tip here, ladies and gents. Never trust someone who guarantees returns. You might want to check the wording of that contract and make sure you aren't signing up with Bernie Madoff. And finally, let me leave you with this one. This Reddit user asks, can I short the healthcare industry by buying an apple a day until all the doctors are away? Once I bought an apple a day and kept the doctor away. If I stop by every day, buy an apple until they run out of doctors, then tell everyone that they run out of doctors, leading to everyone no longer trying to get healthcare, can I make their stock price go down? Genius strategy. I'm sure it'll work. Thank God for the NHS in the UK so we don't have to test this theory. Anyway, thanks so much for watching. Drop me a like if you've enjoyed the video, subscribe for more, and we'll see you in the same time next week for all of your news. In the meantime, happy investing.